What's up, everybody, and welcome to the Wraps 101 series. In this series, we're going to break down everything that we know about wraparound mortgages so you can understand this exit strategy and why burnt out wholesalers and flippers are transitioning to a more passive way to invest in real estate and capitalizing on the blue ocean of individuals that want to buy houses but do not qualify with the banks. So I'm really excited for this series. Most real estate investors are grinding 60 hours a week, managing tenants, fixing toilets, managing flips, talking to traumatized sellers on the phone over and over again. Meanwhile, a small group of investors, including myself, are creating $500 to $1,000 per month in truly passive income per property. The difference is we're selling houses on seller financing to families that don't qualify with banks, transitioning from being landlords to being lien lords. The families have ownership mindset, take care of everything. It's as passive as it gets in real estate. And we went from turning $5,000 wholesales into $150,000 of gross profit over time. So I know what you're probably thinking. Is it legal? I felt the same way 4 years ago when I was wholesaling everything and burning myself out, getting cut out of deals by end buyers, talking on the phone with sellers over and over again, dealing with running a sales team, building a business that I actually didn't want to be in, while all the while I wasn't holding on to assets and creating true wealth. But once I started understanding how wraps, lease options, seller finance deals worked, everything changed for me. My name is Philip Loudon. Over the past 5 years, my partners and myself have completed over 200 real estate transactions. But the real game changer is when we stopped doing flips and we discovered seller financing, specifically wraparound mortgages. And this is when our business took off. This is when we started creating passive residual income and feeling what it feels like to have monthly recurring revenue in your life. Because the experience is, as you start to having passive cash flow and truly passive cash flow where you don't need to fix a roof or a toilet, it feels like a weight lifting off your chest. I've experienced this firsthand. Every deal that came in, $500 of cash flow, $700 of cash flow. It's like, wow, I can breathe now. And today I'm going to break down everything in regards to this model. By the end of this video, you'll understand the basic mechanics and see why the strategy can create true financial freedom. We're going to cover three things: the mechanics of a wrap or seller finance deal, who benefits from the strategy and why. And the third is why 90% of our buyers are entrepreneurs, 1099 employees, looking for homeownership opportunities that the banks will not give them. You're doing seller financing, you can hear a few different terms, and we say wrap as an overarching term, but there's different ways to structure the paperwork. There is a wraparound mortgage. A wrap is when you sell a house on seller financing while an existing mortgage stays in place, essentially wrapping a new loan around the existing loan. You sell that house to a buyer who can qualify for traditional bank financing. They pay you directly at a higher interest rate than what you are paying on that underlying financing. You continue paying the underlying financing payment and you collect the differences as cash flow. So we'll go through a real world example here. We bought a house for $142,000 with $5,000 down. We took over the seller's existing mortgage and structured their equity as seller financing. So whatever was remaining in their equity, we structured as seller financing. They wanted to sell to us in this way because they loved the purpose and mission of our business, which was to help families gain access to homeownership who couldn't gain access to homeownership without us. So the seller financing is sub to, we're at 4.3% interest with total monthly payments of $1,200. This $1,200 is including taxes, insurance, everything is all included in this $1,200. We sold this property for $30,000 down at a $210,000 sales price at 7.63% interest, and we got paid $1,702 per month. Now you can see the difference: $1,200, $1,702. We are cash flowing $502 per month. The total profit on this deal, if the family goes for 30 years, is $167,619. This is on one deal that we probably would have wholesaled for about $15,000 or $10,000. This is mailbox money. No tenants, no toilets, no midnight calls about broken garage doors, no capital expenditure, no repairs, no property management fees. That cash flow that we have coming in every single month is true cash flow. A few years ago, Brandon Turner from Bigger Pockets was saying on a rental that we want to get $200 in cash flow on a rental. Well, that cash flow is not real cash flow because an air conditioner is going to break or a garage door is going to stop working or the dishwasher is going to stop working. And with the maintenance fees, property management fees, you're not making any cash flow from a traditional rental. So let's take a quick look in our underwriting tool here. So we purchased for $142,000. the down payment was $5,000. This is the yearly taxes and insurance. We sold for $210,000, $30,000 down. And you see the true profitability. So let's walk you through this deal on our underwriting tool. This underwriting tool is for our students in our mentorship Wrap Academy, but we do have a free underwriting tool in the description. Sign up to underwrite these deals and break down deals. Purchase price $142, sold for $210,000. Built in nice equity here. You can see what the cash flow is, the 7-year profit or the total profit. Another really nice deal. Next step that we can go into is who this type of deal serves. This is Miss Nora and her family. They're first generation from Guatemala. Nora had been renting for 17 years while living in the United States. This is her daughter and then her grandkids. Her grandkids were in a 2-star school district. She wanted a better life for her grandkids, and they found a property that we had. They got into the property in a 9-star school district, moved their family there. Now they're doing multi-generational living inside the house together as a family unit. They pay on time every single month. We are cash flowing very nicely from this deal, and they're changing generations of their family. This is Miss Dow. Miss Dow is moving from DC over to Kansas City. She is a 1099 employee, and we were able to get her access to homeownership by having her move into one of our properties. They brought a very nice down payment. She was not able to buy a house because she was working as a 1099 and not a W-2 employee. And because of that, the banks would not finance her. And so she was able to gain access to homeownership through our program as well. And now she is building equity. She's having debt pay down. She's capitalized on the appreciation. And we get to cash flow $700 per month while she lives inside the property. Next, this family in the top right corner, they're first generation from Mexico and moved into one of our properties. We went to the house. They had 2 families living inside of there. They turned the basements into different areas for their kids to be living in. They had 2 goats, 1 donkey. He owns a restaurant in Kansas City, very successful restaurant owner, and they pay us every single month on time. In the top left corner here, that's our friend Ryan. He has a candle making business in Kansas City. He is a friend of ours. We had a property on the outskirts of Kansas City, and we ended up selling to one of our friends. Obviously, we prefaced it with this is a business transaction. These are the rules. We laid it out very, very firm, so he's aware of how the rules work. But this is another friend of ours, an entrepreneur, gained access to homeownership, and now he hosts men's retreats, men's circles, and so on in this house that he owns. Our motto is doing good while doing well, and this business model serves the buyers on a deep level by allowing for them to gain access to homeownership. And a lot of these families see their house as their biggest savings account. The best way to build wealth in the United States is through owning real estate. And all these families would not be allowed to own real estate. They went the traditional route with the traditional banks. And the banks have their products. The banks do very well for themselves, but there's a huge gap in who the banks serve. And that's where we can step in and be the bank. The business model of the bank is one of the best business models there is. For the investor, the strategy creates true passive income. Nothing is fully passive, but this is as passive as it gets. Every single house equates to $400 to $1,000 per month of passive residual income. It builds long-term wealth, allowing us to create over $100,000 over 7 years. It is purpose-driven investing. It's doing good while doing well, helping families to achieve homeownership, and it's a scalable business model. We've done this over 60 times, and we get freedom from property management headaches. We don't need to be tied down and be slaves of our business. We can build a business that has an ecosystem of wins that helps all the parties involved. And we can also help our families and design our lifestyles how we want to design them. There is a massive gap in the housing market. Millions of families in the US have stable incomes, want to own homes, can afford the monthly payments, but can't qualify for traditional bank financing. The banks have rigid requirements. We don't. We underwrite based on income stability, down payment, genuine desire for home ownership, and local market conditions. This creates a blue ocean opportunity. While everyone is competing for the same wholesale deals or traditional rentals, we're serving an underserved market with a strategy that creates win-win-win scenarios. Put your comments down below. Join our free school community. We do live calls every week. Check out the free deal analyzer that's in the comments as well. And in our next videos in this series, I'm going to talk about how to find and analyze wrap deals, how to identify markets, how to do the underwriting on these deals, finding the right buyers, structuring the deals for maximum safety and profit, and how to scale to 10 plus properties for true financial freedom. It only takes 10. With the amount of passive residual income we have coming in, we now have a choice point and we can step back and take whatever that next step may be. Maybe it's doubling down, getting to 10,000, 15,000, 20,000 in monthly cash flow. Maybe it is taking more time to be with your family. Maybe it's going on mission trips. There's so many different things to do in life. And this is a way to build a business that's creating an ecosystem of wins, providing value and service to the world, to these families, and also to yourself, because you're setting up a business model that does not create headaches and stress and time away from your family. If the money's not coming in, I send a text message. That's usually about the extent of my management once a family's inside of a house. So thank you guys for tuning in. If you made it this far, subscribe, comment, let us know what questions you have. We're going to continue cranking through this series of Wraps 101.